Why is this kind of reliance on Coinbase changing, or at least the relationship changing at this point in time? And what does it say about the way custody is changing around the way ETFs are managed?
Well, Sonali, good to see you. Mike, thanks for having me on. Frankly, nothing of significance has changed here. What we do constantly with Coinbase, just like all our other service providers, is there's a operational fine-tuning and optimization of models as you get into, we're now 8 months basically into these crypto ETFs. So this is really a normal course update as we refine things, and we've filed a handful of other amendments in the last 8 months. This one just happened to get some traction for some reason.
Yeah, Robbie, another big story in the past week was that the Nasdaq received approval to list options on the iShares Bitcoin trust. Talk to us a little bit about the significance of that. What more needs to be done for these options to start trading? And will there be any difference in sort of position sizes? Do you expect, limits on position sizes in these options?
Yeah, well, that was a great milestone. Obviously, we were pleased to see it. There's a couple other milestones left on the process before these would actually be able to trade. But ultimately, we think it's positive. If and when we do see those launch for the ecosystem, for the ways that folks can trade and hedge risk in a more flexible way. Position size, TBD in terms of how that evolves over time.
I want to widen the lens a little bit here, because one thing that's been really interesting, and BlackRock, of course, is out with a new report that really discusses the risk profile of Bitcoin and crypto assets. You have started to see, for example, Bitcoin really trade in line with other risk assets, like stocks. Is that a good or a bad thing at the end of the day?
Well, I think what we've seen throughout its history is that it's varied, right? And so you've had kind of on a long-term basis, it's been pretty close to zero as an average correlation, but certainly there's been periods where it spiked, that correlation with equities has spiked, and there have been periods where it's actually gone negative. And when you look at it beside gold, actually, gold shows a lot of the same patterns, where you have these temporary periods where it spikes, but long-term close to zero. And I think that what's happened a little bit in the crypto industry has been a bit of an own goal, frankly, where some of the crypto research type publications and daily commentaries have taken the fact that Bitcoin, which is obviously a risky asset, and extrapolated that to say that therefore it is a risk-on asset and should trade like equities. And when you look at it fundamentally, the drivers of Bitcoin in the long term are very different from what's going to drive equities and other so-called risk assets. And in some cases, they may actually be inverted.
Robbie, to shift gears a little bit to the Ether ETF, the iShares fund has attracted about $1 billion in assets, pretty impressive for a short period it's been around. But when you look at the whole complex of Ether ETFs, most of the flows are coming out of Grayscale and into the other funds. It doesn't seem on a net basis there's a ton of new money chasing Ether in ETF form. Do you have any sense of why that is? Does that have anything to do with the lack of a yield, the lack of a staking yield, or is it something else that is sort of making the inflows maybe not as impressive as people had hoped?
Yeah, I think first off, the launch for Ether, which is our iShares Ethereum Trust ETF, has been very strong, right? $1 billion in inflows, as you noted, in less than 2 months is a really good launch for an ETF. But certainly the investor narrative and clarity, particularly on the more institutional side, is a little less clear for a lot of our institutional clients for Ethereum today as it is for Bitcoin in sort of that digital gold global monetary alternative case. And so that may be something that evolves over time as we see the technology innovation potential of ETH grow.
I guess, how hard is the sell when you think about the retail investor base that can get into this? If you're trying to tell them it's digital gold, yet the volatility is still so high, and many people don't understand exactly what it is at the end of the day. Is it something that will eventually be used as more payment methods moving forward across different parts of the world? Is it something that you hold and never sell, right? How do you then make that case to a generation of people who have not gotten into this asset?
Sure. Well, when you think about Bitcoin, we think of it primarily as an emerging global monetary alternative, right? It is a scarce, global, decentralized, non-sovereign asset. And It is an asset which has no country-specific risk, has no traditional counterparty risk. So these are interesting properties when you think of it from an investment perspective, particularly in a world where there's growing concerns over money printing, currency debasement risks, political, fiscal, sustainability challenges in the U.S. or elsewhere. And so that resonates, frankly, with a lot of investors. It goes back to what we talked about earlier with the risk-on piece. It confuses investors when people talk about it as risk-on, because based on the properties that I just described, you would think of it as risk-off. And that's where I think
it has a marketing problem.
So you could say that. And so, the reality is there's probably 2 or 3 things a year that happen typically that actually impact the fundamental value of Bitcoin. This year, I would argue there's been 4. But that makes it hard to write daily stories, right? And so you see this instinct to kind of point to whatever's happening in equities or unemployment or jobs numbers or manufacturing, which really has no connection to Bitcoin.
Yeah, Robbie, obviously we have an election coming up. Donald Trump has made it very clear he'll be a very crypto-friendly president. There's even a lot of hope in the industry that Kamala Harris will have a softer approach than Joe Biden's administration. How does that affect your planning? I mean, is there the potential to sort of just open the floodgates for new ETFs tracking other coins? And how are you thinking about that prospect?
Yeah, well, I think one thing that has clearly happened this year is there's become a bipartisan recognition that there's a need to develop clear regulatory frameworks around this asset class and this technology. And so I think that is a really encouraging trend. So we're optimistic that some way or other we will see a constructive framework that allows the U.S. to lead in digital assets and to harness the potential of this technology.